Thank you all for inviting me over, and particularly the ambassador, to New Zealand. It's been a couple of fantastic months with all the excitement going on here in New Zealand with the capital structure debate of Fonterra. And I've been quite keen actually for many years to come over to New Zealand. So I was happy to receive this invitation to attend this conference and present the paper later this afternoon. It just got all the more exciting now that soon after I received this invitation, and Fonterra decided that farmers would have a second vote about the important proposal, trading among farmers. I'll be discussing that in some more detail later, but I just want to share the main conclusion of my thinking about trading among farmers. So my name is Onno van Bekkum. I have since 2.5 years. I'm an independent. I research, advise, and give courses on cooperatives, cooperative strategy, capitalization, governance, and member engagement in the Netherlands. Cooperatives in all sectors in the Netherlands. I just found out from a study I did, we have a combined turnover in the cooperative sector of 111 billion euros, which, if you divide that by our gross domestic product, equates to 19%. Comparing apples with pears, but cooperatives in the Netherlands are very big. Internationally, I look at cooperatives just in the food and agribusiness sector. I've done that for about 17 years now, and enjoying every day. 12 years ago, I completed my PhD, which was about capital structures in cooperatives, how they align with strategies of cooperatives. The Kiwi Dairies and the New Zealand Dairy Board, New Zealand Dairy Group were case studies in my PhD. Didn't manage to come over back those years. This is my first visit to New Zealand finally, so I'm happy here to be with you. One of my notes I was just looking at yesterday, my comments in my PhD, is that for the outsider it's difficult to perceive why it would be so difficult for these two cooperatives to realize their long debated mega merger. That's how I looked at it, and well, half a year later the Fonterra was finally created. Congratulations with that. Crunch time, so it's just 3 days ahead of the vote, and farmers have been waiting for a long time to receive a lot of documentation. Finally they got it, and there's a lot to read, and it's quite complex stuff to read. I've read a fair bit in my year so far. I found it very complex, and it must be complex for farmers to really understand what's happening. I've thought about this for a while, and I want to share some conclusions with you. Again, you know, as an overseas observer, that's how I'm looking. But it's difficult to understand why TAF and TAF only should be considered as the solution to Fonterra's redemption problem. A couple of weeks ago, I was invited by a group of concerned farmers to share my views about the trading among farmers proposal. So that's how I got involved. That's after I published a few articles a couple of years ago about the first round of votes on trading among farmers. This is Leonie Gurney. She is the well, she heads a group of farmers that is concerned about what this will do to the future of their co-op. You can think about cooperatives in many different ways, and these are some things I hear. A cooperative basically is just a normal business that competes in the same markets, just like any other business. But at year end, it distributes returns to a special class of owners that we call members, who are also the suppliers to the business. I don't think this really justifies what a cooperative is. I see, yes, it is a business, it is active in markets, but it's not just the same as any other business. It's different. It's not just different because it distributes returns to a different class of owners, who are suppliers to the business. It's more profound than that. Another way to look at a cooperative is to say that it's a business where 100% ownership and control is with farmers, and where only 75% of shareholders decide on any changes on key features. This is a quote from, it's not a cooperative definition, but it's a quote from a recent post to members of Fonterra, justifying why, one of the arguments justifying the trading among farmers proposal. I believe a cooperative is a trusted business because it serves nothing but the best long-term and collective interests of the single class of owners, being producers. Everything that a cooperative is designed to promote the interest of producers, which is different from the previous slide where it said it's about distribution of benefits to an owner group. This is about about creating a future for farmers that without a cooperative would have difficulties to survive in the market. If I look at Fonterra, the way that it is leading up to the vote, it is a New Zealand dairy business that requires for farmers to control their own destiny. That's a quote, a unifying vote of over 50% of farmers that will be voting on Monday. Don't know exactly how much that will be, 50, over 50, will it be 60, will it be more? They will need to vote in favor of TAF. And TAF only, there is no plan B apparently. As the governmentally enforced solution, that's the way it's justified at times, to the problem of an unstable capital base, which would possibly have an impact as much as 1 billion to cover the potential costs of redemption risk, which results from what I view as a deficient fair value share structure. I'll explain what I mean with deficient in the afternoon. That otherwise may not be changed. And my question is, does TAF, trading among farmers, does it really resolve that important redemption claim? And I think it doesn't. What it does is it says there is this redemption claim worth potentially $6 billion. That's the total value of shares as it's valued today. Value that's not in the books of Fonterra. Potentially that claim is hanging as a millstone around the neck of Fonterra. Trading among farmers does not solve that problem. What it does is it removes that millstone away from the books of Fonterra. And then what? Two minutes. It starts an internal trading system of shares where the value, that 6 billion, farmers will trade internally the shares of Fonterra. This way Fonterra doesn't redeem the 6 billion capital to members. That risk is removed, but where does it go? I think you can't just strike out the redemption claim, say you removed it, and believed it just disappeared. Where did it go? It went to farmers. And I believe that by transferring the redemption claim, the co-op is sold to individual farmer shareholders. I think it changes something at the heart of the cooperative. Members had access to the equity that was there in the cooperative, and Fonterra will not Well, it just says, listen, this is something we call a cooperative share. You may trade that share with others. That will redeem your share. I think in effect what this does is it transforms the share into a derivative of a share. It is no longer a cooperative share. It has attributes of shares of a normal company, dividend, value increase, trading, all of that. But I believe it's not the cooperative share anymore that was a cooperative share, a redeemable share. It transforms Fonterra into a farmer-owned business. It privatizes the cooperative into the hands of individual farmers. A farmer-owned business thinks differently. Its idea is to maximize investor returns. Shareholders will look differently. The board and management will look differently. There will be free riding in the system. Farmer solidarity will erode and disappear. I'll leave this for later. The harsh reality, that's a quote from a booklet sent to farmers. The harsh reality is that we need to set aside large amounts of capital, possibly as much as 1 billion, to cover the potential costs of redemption risk. That's a lot of money, 1 billion. But let's put that into perspective. Since 2002, $7.2 billion was invested by Fonterra members in the cooperative, buying shares as they became members of Fonterra or as they grew their production. During the 10 years, $1.7 billion was retained in the business. Of that, 925 was retained just during the last 2 years. I think that suggests the 1 billion problem may not as big as it seems. If you take 1% of milk earnings, the milk check farmers receive every month over the years, 1% of that is just $600 million. I think this puts TAF into perspective. Say the redemption problem is big, but any number in New Zealand dairy is big. There are other ways to address the redemption problem that may not cause all sorts of problems like the ones listed here, or the one changing the very nature of the cooperative into a farmer-owned business that TAF may bring. My conclusion is that TAF changes the very heart of the co-op. It leads to a major mind shift. Rather than looking from a producer perspective, people will be looking from an investor perspective. And I'm just wondering, am I getting this wrong? And if not, is this the way Fonterra should really proceed? That will mark it for now. And
thank you.
yes.
Good question. And we will have the opportunity for some conversation. We need to head down today. But thank you.